If your trading chart looks like a Diwali fireworks show, then you're not trading, you are decorating. Let's clean it up and learn how to combine indicators the smart way. Hi, I am Pranav K, an NISM-certified trader and trainer, and you're watching Stockshaala by Kotak Securities. In this video, we're not going to add more indicators, but we're going to learn how to use less of them, but in a better way. Let's get into the art of confluence. But before we do that, it's very important for us to know why too many indicators kill clarity. Some traders think more indicators equals more confidence. But most of the time, all they get is more confusion, conflicting signals, paralysis by analysis, a chart that looks like a science fiction movie. More tools don't mean better trading. It means more things to argue with yourself. Most indicators fall into three buckets. The first one is the trend following. For example, it could be the moving averages. The second one is momentum or strength indicators. It could be your RSI or stochastic indicators. And third is the volume indicators, where it can be the normal volume profile or the volume or VWAP as well. So it's important for you to choose one indicator from each bucket rather than choosing 2 or 3 indicators from the same bucket. For example, choose one from the momentum, one from trend following, and one from volume, and you are good to go. Now, if you're not clear about what these indicators are, like what is an RSI, what are moving averages, please make sure to watch my previous videos because we have covered all these indicators in detail. Now, let's understand the power of confluence by using 3 indicators. First, let's understand if the trend is positive or strong by looking at the 50-day exponential moving average. If the 50-day exponential moving average is sloped towards the top, then you know that the trend is bullish. Second, we are going to use the MACD indicator and see if we have the signal line above the MACD line. If it is above the MACD line, then we have a confirmation on the momentum that it is positive. Third, we are also going to look at volumes, and whenever volume spikes along with these 2 other indicators, we know that there is confluence and you can go for the trade. A very simple analogy to help you understand this is that it's like 3 friends saying yes before you take a trade instead of just one loud friend, RSI, convincing you alone to take that specific trade. Here's another analogy for you to understand this entire concept better. Your chart should look like a simple thali and not an extravagant buffet. Indicators work the similar way. Think of indicators like items on a thali. You don't need 12 different curries, 4 different dals, and 3 different types of rotis. Instead, you need the right balance of all these 3 things so that you can enjoy the flavor to the fullest. Overdo it and you won't taste anything and you will be filled with regret. Similarly, indicators as well. If you use too many indicators, then end of the day, you won't have clarity but only confusion. Here are 4 golden rules of indicator combinations. Number 1, try to keep maximum of 2 to 3 indicators. Number 2, use one trend, one momentum and one volume indicator. Number 3, avoid overlapping signals. And number 4, always let price action lead your decisions. So, in summary, indicators are supporting tools and not your boss. But here's a secret. What I shared with you so far is exactly what I use personally. I use price structure, RSI, as well as volumes while I'm trading. This is because I want price to tell the story, whereas the indicators, that is RSI and volume, are like the subtitles of a movie that give me more clarity. To quickly summarize what we have learned so far, number 1, don't overcrowd your charts. It's not a nightclub. Number 2, use maximum of 2 to 3 indicators. Number 3, use one from each bucket of trend, momentum as well as volume. And fourth, make sure price is always leading. And finally, keep your trading decisions simple and not dramatic. Your chart is a tool, not a canvas for modern art. When you look at the chart, if it takes you 5 minutes to understand what's happening, then it's already too late to make a decision. So make sure it is simple and you're able to understand what's happening in a snap. In the next video, I'm going to show you how professional traders build high probability of profit setups combining structure, timing, and volumes. So if you're interested, then go ahead and watch the next video. You are watching Stockshaala by Kotak Securities. I am Pranav K and I'm going to see you in the next video. Don't forget to like, share and subscribe.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.